Today is Wednesday, April the 22nd. We're looking at FinViz. This volume that you see here is pretty low, but I think that it's not representative of what you're going to see when we look at the market breadth and the advancers and decliners. But the market popped at the open and then just trended upwards. Someone said on Twitter that this was the sign of a healthy market, just trending up slowly. I don't think that's true at all. He said it was a sign of a democratic market, meaning that everybody's acting in one direction in a constant linear fashion all day long. Does that mean there's no more high frequency trading anymore that causes the drops at 10 o'clock in the morning and the pops at 3 o'clock in the afternoon? We're going to have to see if that ever repeats itself again. But the stock market breadth takes a pop up. So let's look at a different chart here where we can expand things a little bit. And you can see that the market oscillator on the 12-month basis did pop up. So what we're looking for, and what we've always been looking for, is a sign that the bulls are in charge. And that means that we need to get the market oscillator above the previous high. If we can't, and that's going to be a stretch, it won't happen tomorrow. Could happen Friday if we had 2 up days in a row, but I wouldn't count on it. If we don't get above this point, then I think we really are headed down into an oversold direction. And what would that look like? Well, let's take a look at the volumes first. Here is the up volume and the down volume. So that up volume compares to last Tuesday, certainly much better than Monday and Tuesday, but they were negative days. Still not high volume, not what we experienced 2 weeks ago. And the overall volume was a little bit less. So each day is having lower and lower volume. Now we've got 1, 2, 3 days in a row since Friday where we've had lower volume. And this is actually lower volume that we had in any day last week. So not necessarily any positive signals there. Here's something that I tweeted out showing you how many stocks are now being dictated to by the daily cloud. Look at the S&P 500. Came down to touch the top of the cloud just like it did on Friday, and that's as high as it went. Apple has done 1, 2, 3, 4, 5, 6 out of 7 days where it's touched the cloud and been rejected down. Caterpillar, much the same, following the edge of the cloud, and the longer that takes place, the more difficult it's going to be to break through the cloud. Home Depot, we talked about it moving through this thin portion of the cloud, and that can happen tomorrow. And look at the Chiku span over here, just at the 8 EMA, stopped at the 8 EMA. But there's a lot of area for it to move and get support from these candles if it can just leap over these 3 candles here. Google, same thing, rejection in the cloud, but on the 50 simple moving average, and closed the day right at the cloud. And Cisco came through the cloud, but came down with that magnetic pull of the flat cloud and came down to find support and bounce off the cloud. So the cloud has been really important. I just picked these 6 random stocks and all of them match the pattern. Here's the S&P. Still think we might be looking at something that moves along the bottom of the cloud. If we're going to make a move through every day from now on in, the resistance is greater and greater. The VIX volatility index dropped. I'm going to go to NVIDIA because I did make a move in NVIDIA today, and I made it before this alert hit. We set this alert so that if NVIDIA popped above its high of yesterday, then we would call this move off of the cloud a positive move. So I did buy today, and I bought 2 contracts for June, long on the 290, short on the 300, thinking that up around here, 310, 311, may be where it exhausts itself, and then does a little pullback before it comes back for another try. But since the market hasn't finished bottoming out, I wanted to give myself enough time. I didn't think May was enough time for this trade to work out. I'm willing to wait for June. Apple, we saw that before at the cloud. Amazon pulling back from that 150%. Google, we saw that before. Caterpillar, bottom of the cloud. The Gartley pattern here, which is a true Gartley, 61.8% retrace of X to A, is in danger of failing. We could almost say that it's failed, but not quite. It hasn't closed below this low point, but it's looking pretty weak right now. So the Gartley pattern, tomorrow, let's see what happens. And let's see if, well, let's see it right now. Does Motive Wave still think that this is a Gartley? Oops, I'm sorry. Let me get rid of that Gartley there. There we go. So let's see if Motive Wave still thinks that this is a Gartley pattern, or has it given up on it? It's changed now. It's gone to a different pattern. It now picks up this one here. Well, it's pretty much the same. It's still a 61.8%, but now it's drawn a new value for C. So this is a bit different. Let's just back up and see how different. So that's what it was before. B was at the top of the cloud, and we had a target of 137.06. Now it's giving us the same 137.06. It did give us our B up here. Still the same. So it still sees the same Gartley pattern. Disney up 45 cents, heading for the cloud. Coca-Cola, which reported that Coke sales are down. No kidding. Nobody's going to restaurants and 7-Elevens and hanging out and buying Coke. AT&T had earnings today and did pop up and was up $1, was up over 31 at one point. And then I think news came out about television subscribers. They've lost television subscribers, and that's probably why they made an early announcement about HBO Max starting to stream on May the 27th, but that didn't save them. So I rolled my 31st weekly calls, which made about, I think there was only 6 cents left on them. I rolled those all the way to December, but I did to the December 35 because I think we're not going to see $35 in AT&T. If we do see it this year, it's got to break through the 50, and the $35 is where the 200 EMA is right now. So I'm happy keeping AT&T for the next 2 dividends that'll come in September and December. And let's look at the cloud, and you can see that it's going to take a long time for it to get to $35. So I'm happy with it. There's only 87 cents on the short call, but since we're probably going back and finding new lows, I should be able to profit on most of that and then take off the calls and then just hopefully ride the stock higher. I think the HBO Max thing could be good for it, but it's not going to be Disney kind of good. Whirlpool up $1.17. JP Morgan, just to take a look at the banks, it's pretty representative of all the banks. Let's take a look at all of the banks here on a daily basis. They're all pretty much doing the same. Today was not a good day for the banks. Where are we going tomorrow now? What did we miss? Talked about NVIDIA. If NVIDIA makes a new high tomorrow, so I'm going to move this alert to here. If it makes a new high tomorrow, I'm going to add another contract, and then I'm going to move my alert to this point here, and if it moves above that, I'll add another contract. Shopify, boy, did we miss that one. That is an incredible rebound, and we should have known that, given that so much business is going offline. It's just blown away its Gartley pattern, which had a 507, then a 532 target. So when we see that happen, the next thing we do is we draw the retracement to see how high it's going to go above the original X value. And that target should be, this is a low probability Fibonacci, so I'm going to get rid of that one. It should go to 672.39, and then like Amazon, we might see it pull back. Damn, that would have been a good one. We were long shop calls at one time. Remember that? So what are we doing tomorrow? This is a zigzag choppy market. Again, I'm going to say, like I said yesterday, what we're really looking at is the McClellan oscillator. And what we want to see is a high above this point before we see a low before this point. If we see a low below here before we see a high here, then we can go back to the S&P and look at where our test for a new low would be. It could be here. Let's put a line in the sand there. That could be a test, but I don't think that's the ultimate test. I think this one will be, and then I think this one will be our retest of the lows, and then we should have cleaned out all the sellers and we should be good for a go.